Hello and welcome to HistoryPod. On the 5th of August 1861, the Revenue Act was signed into law by Abraham Lincoln, imposing US federal income tax for the first time. The years preceding the American Civil War saw the federal budget deficit grow to more than $40 million. As secession and war became more likely at the start of the 1860s, the government began to quickly raise funds by paying up to 12% interest on treasury notes. However, this still left the government with the problem of how to pay off the interest itself. With the outbreak of the Civil War in April 1861, both the Union and the Confederacy faced financial pressures as they struggled to train and equip more volunteers than they could accommodate. In the North, Lincoln sought constitutional advice from cabinet ministers Edward Bates, Gideon Wells, and Salmon regarding the legality of collecting new forms of tax revenue. Lincoln was aware that the Constitution gave Congress the power to impose taxes, duties, imposts, and excises, but that direct taxes had to be distributed in proportion to each state's population. Consequently, at a special session of Congress in July, legislators reluctantly opted to increase certain import tariffs and institute a new property tax. The Revenue Act of 1861 was signed into law on the 5th of August and imposed tariffs on imported products ranging from sugar and tea to wine and silk. Meanwhile, tax on property required the establishment of an organised revenue collection system that led to the formation of the Internal Revenue Service the following year. The Act also imposed income tax at a flat rate of 3% on anybody with an annual income of $800 or more. However, only an estimated 3% of the population earned that much, so the Revenue Act of 1862 introduced a new progressive income tax with a lower threshold of $600 in an attempt to raise more revenue for the Union.